Hello and good afternoon. My name is Folger Emerson, and I'm a branch manager for Security National Mortgage Company in Pleasant Hill. I was asked by Kate and Monica to sort of give like a little bit of an overview or some tips on what you can expect on the financing side when you go to buy a house. So I just kind of wanted to focus on the four basics that are obviously important in the home buying process, and we call them the 4 C's. The first C is credit. So credit or lack thereof could be a challenge for you if you're looking to buy. And credit, certain credit scores are allowed by banks. Certain credit scores are not allowed. Traditionally, the better your credit score, the better the terms you're going to get, and vice versa. The lower the credit score, potentially the more expensive the terms you can have. One thing that I do want to recommend is, work with a lender who will do a credit review for you at no cost. 50% of credit reports have mistakes. So you don't want to wait until you tell Kate or Monica that you want to make an offer and wait until then in order to pull your credit, because chances are there may be something on there that could trip you up or delay the process. So it's important, make sure that you actually have your credit reviewed by someone who knows what they're doing. No one should charge you for it, and it's different to do it with a mortgage person than it would be to do it with like a Credit Karma or one of those online people for free. The second C is cash. You want to flip it around and call it something different. What it really is the amount of money you have for a down payment. So we call that the cash, and it's not literally cash because it's virtually impossible to use, cash or money you have lying around. The money has to be in a bank. It has to be seasoned, and it has to show a paper trail in terms of where it came from. So in terms of cash, there are loan programs out there where you need to put nothing down, especially for a VA loan or some of the down payment assistance loans. And then traditionally, you're looking for a 20% down payment. So lenders should have different options, anywhere from 0 down to 40, 50, 60% down, whatever you want to put down. But knowing how much cash you have and how much you're willing to part with for the down payment and closing costs and reserves is very important. So it's you want to make sure you talk with someone about that. The third thing is capacity. So what capacity means is based on your down payment, based on your purchase price, based on your current debt, what kind of capacity do you have due to your income in order to make the payments? So when we look at capacity, we want to make sure, and when I say we, I mean all lenders and all banks out there, we want to make sure that those payments that you're going to make on a monthly basis, in addition to your other obligations for debt, are comfortable and fall within a range. I won't bore you with the details here, but traditionally, if you're thinking about what kind of capacity you need, if you look at your gross income as a pie, 43% of the gross income is the maximum amount for most lenders that they'll let you use in order to make your housing payment, principal, interest, taxes and insurance, and any other revolving debt like student loan payments, credit card payments, or car payments. So capacity is critical. You want to make sure you're comfortable. You don't want this to be a burden for you. So again, work with someone that can walk you through the numbers and show you what kind of capacity you have. The fourth C is collateral. So not only do you have to qualify, but in some cases, if you're buying maybe a condominium, you're buying a second home, multifamily, things like that, the collateral, the property, has an impact on your terms of your loan as well. If you're going to be doing a condominium, they have certain restrictions, certain additional items that need to qualify. If you're buying a multifamily property, 1 to 4 units, there may be additional things there as well. So, making sure that you're buying a property that you can move into. I think the basics are that you can basically move into, eat, bathe, and go to the bathroom. Property's got to meet those minimum standards in order for us to look at lending on it. So I hope this was helpful. 4 things you want to take into consideration: credit, cash, capacity, and collateral. I'm always available for any questions, and you can follow me on the social media at FolgerLoans. That's FOLGER Loans. Have a great day, and hopefully this was beneficial. Take care.